Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 6:30 in New York. It is Wednesday, January 16th, 2019, and this is the Daily Report for Gold and Silver. Respectable gains across the board in the precious metals market, with palladium absolutely leading the way, going to a new record high and taking over the price of gold. Gold still closed up $5, currently up $5.10 and trading at $12.9350. Silver really absolutely unchanged on the day at $15.62, and about a % increase in platinum futures at $8.09. But take a look at palladium, folks. That is at $13.2410. That's the March futures contract. It missed parity and went right through it like a hot knife through butter. It is now the new king of the hill. Now, the dollar itself was a little bit stronger, so it provided a little bit of tailwinds. However, it wasn't that much of a influence today in terms of market pricing in the precious metals. We did have the equities markets close higher, 141 points in the Dow. S&P closed up about 0.2% at 2616, and the NASDAQ Composite closed slightly higher on the day. Traders, a very interesting day in the precious metals markets, all scoring gains. Palladium really scoring the largest gain of the day. We'll talk about that in a second. But first, I want to take a look at what we're seeing in the gold market after a respectable gain today of about $5, closing at $12.93. But I really want to focus upon the moving averages. As you know, I use a series of 3 moving averages, and the moving averages that I use is a 50-day, that is in green, a 100-day moving average in blue, and then the longest, a 200-day moving average in red. Now, in a bull market, when it's fully in place and the moving averages are in alignment for a bull market, what you get is what we saw back here in 2016, and that is where the longest moving average is at the bottom. So what we're looking at right now, simply put, is the 200-day being below the 100-day, which is below the 50-day. That's the proper alignment for an extremely bullish market. We haven't seen that in a while. In fact, the last time that we saw it was just for a short amount of time here. You've got the 50-day, 100-day, and 200-day. You had kind of a cross here as the market came down, and then you had the proper alignment here, 50-day, 100, and then 200. But that all changed back in May when we had a series of crosses inverting the market. And so in a bear market, proper alignment is going to be longest on top, followed by the middle, followed by the shortest, and that's exactly what we saw. What we've been talking about with these moving averages is that we noticed a real change really towards the end of last year in November, when at the end of November, what we saw was this cross between the 50-day and the 100-day, a golden cross occurring, and now we had really these moving averages moving back into proper alignment for a bull market. Now, the reason I bring that up is we are really within striking distance today, just about a little bit over $3 between the shortest term 50-day in green and the longer 200-day in red, which of course is going to be the first step needed for these moving averages to come in total bullish alignment. And that is for the green, the shortest term, the 50-day, to cross over the 200. The next thing that we would want to see is the 100 cross over the 200. And at that point, we would get that perfect bullish alignment as we see right here, green, blue, and red. And that, to me, traders, is significant, because what we're looking at is a market that has been compressing in range. It's absolutely found some real resistance at 1300. And even though the moving averages are lagging indicators, they are telling us that momentum is still there and that we do have the possibility to see this market break above current pricing. Of course, we are long at $12.68. We have stops about $10 above that, and we're really trying to determine at this point what's going to happen in terms of the next major move in gold, because we absolutely have a compression in range, and when we get that break, it's going to release the energy and could be a sizable move, either up or down. As you know, I believe we'll probably see it move up, and that is because it tends to have the trend direction, that prevalent trend direction, be the way of the breakout. We are looking to get out and pull profits on our February. We're also looking to add to that by going long an April position if we feel this market breaks and closes above 1300 and is going to maintain this bullish posture for a little while longer. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.